Hi, welcome to our workshop on Monday. First day of the week, the first day of the month, in fact. So typically, equities tend to do quite well on the first day of the month, although it is a bank holiday in the States, Labor Day, and today's no exception for equities. I noticed that certainly European equities have done quite well. The S&Ps have recovered from their overnight lows a little bit, so looking quite positive there, but we don't expect too much in the way of moves on the FX side of things. It is a very, very important week, however. We've had the events from last week have sort of been digested. The most important thing that we were anticipating was the Jackson Hole Symposium and the speech by Ben Bernanke on Friday afternoon at 3:30. He sort of said pretty much what we were expecting. If things continue the way they are, the Fed will engage in another round of QE3. At least that's what the market is expecting, and may extend even further their outlook for the ultra-low interest rates into 2014. There's lots of debates from various Fed officials as to whether it's a good idea for QE3 or not, and its effectiveness. But QE3 effectively, what that means is printing money that's used to drive long-term rates down, i.e. the Fed engages and buys back US bonds, 10, 30-year bonds, driving down interest rates. That's the expectation. I think the market was a little bit disappointed, though, because some traders were looking for sort of a definitive guide to it, that it was going to happen on such and such a date, which Ben Bernanke did not state. And I think that rather sums up sort of some of the feeling this week. It is a very, very important week. Today is the Labor Day holiday, so all the federal markets are shut, banks are shut, so nothing is trading out in the States. Typically when that happens, like in the UK, the markets are particularly quiet, and today is no exception. We do, though, have a very important week this week. We're looking here at Forex Factory just to review the data coming out this week. The red high-impact data are the ones we're going to focus on. There is not really anything that I'm particularly interested in this morning, really, but the key announcements really start to flow tomorrow, and I'll focus straight away on the ISM manufacturing data out at 3 o'clock. Manufacturing absolutely critical in the US. We have been through quite a soft patch just recently, and we are looking for a slight improvement there. The market was, the data from the previous month was suggesting a contraction in the manufacturing sector, but we're looking for a rebound. Any figure above 50 is expanding, anything below 50 is a contracting sector. The irony with all this data is that if the number is particularly strong, it might cause a negative reaction in the markets, as Ben Bernanke has quite clearly stated with the Fed that if the benign conditions continue with the US economy, that they will be acting. But obviously if you get positive data in the run-up to the next meeting on September the 13th, then it's likely you'll see a negative reaction. The market wants the drug being QE3. And remember that QE3, whilst it will help equity markets and asset prices, it won't be good for the dollar, though. So that's something that we should look out for. However, I do think a lot of it is built into the markets. As I said, that's one of the reasons why the markets sold off a little bit on Friday following the speech by Ben Bernanke, because I think they were a little bit disappointed with the fact that there was no particular start date for this. Anyway, Wednesday, services PMI in the UK, looking for a slight recovery, still in expansion mode there, which is good. We've got the rate statement from the Bank of Canada at 2 o'clock. But really, it all kicks off on Thursday, and the most important event of the week, really, and and it is pretty important, bearing in mind we got non-farm on Friday, is the central bank meeting, the European Central Bank meeting, I should say. There are faint hopes that we could be getting a rate cut in Europe, but I somehow doubt it. I think that's not much of a chance there. But the most important thing is the anticipated government bond market intervention that Mario Draghi has been sort of shuttling backwards and forwards between France and Germany and Spain and Italy to resolve the strategy, and it's something that the market, certainly in the short to medium term, the direction hinges on what is announced on Thursday, and that'll be made in the press statement at 1:30. And I don't know, I still believe, like what happened last Friday, that a lot of positive news is in the market, and I just have a feeling that, we could be slightly disappointed. But again, please don't trade off that. Wait until the news is out and focus on the price action and not what some may or may not be saying. It's absolutely key. Obviously, they can't afford to screw this up. They'll only have one chance here, and I think come Friday we're going to know exactly how the land lies there. So very, very important. However, it's interesting to note that we still await whatever Draghi announces. We will still await the consideration or deliberation of the German Constitutional Court about the use of the European Stability Mechanism. So that's something that won't be ratified or approved until I think the 12th of September. So that'll be hanging around as well as an unknown quantity even after Mario Draghi's announcements on Thursday. Then finally, obviously Friday, well, we've got non-farm payroll, and again, this bit of data, a bit like the ISM manufacturing on Tuesday, that data, if it's weak, will definitely spur thoughts of QE. We're looking for numbers weaker than last month, or that was a little bit of a rebound from the previous month. 121,000 non-farm payroll jobs. Anything below 100,000, I think it will be a shoo-in that we're going to get QE3. So that'll be eagerly anticipated at 1:30. As I say, a lot going on, a big week. We will give you an update on Thursday at our next workshop at 8 o'clock. In the meantime, good luck with your trading, and speak to you then. Thanks very much for listening.